Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report from SEACOR Marine Holdings, and while it might sound like we're talking about a company that trains dolphins, it is not. Instead of sea mammals, they work with marine vessels. Let's see what's going on in their world. The main event of this report is a stock buyback that happened in early April of 2025. Basically, SEACOR Marine bought back some of their own shares and warrants. This can be a sign that the company thinks its stock is undervalued and a good investment. SEACOR Marine purchased shares from funds connected to Carlyle, a big investment firm. They bought back a little over 1.3 million common shares at 49.90 each, plus warrants to buy another 1.2 million shares at an exercise price of only a penny per share. The warrants were bought for 4.89 each. All this cost SEACOR Marine around $12 to $19 million. Once this deal was done, the company didn't have any outstanding warrants left to purchase common stock. Warrants give the holder the right to buy shares at a specific price, and with this purchase, SEACOR Marine eliminated that potential dilution of their stock. The company used money from selling a vessel to pay for buying back the stocks and warrants. They got permission from their lenders to do this under their credit agreement from November 2024. This credit agreement involves a loan of up to $391 million. To let everyone know about this, SEACOR Marine also put out a press release, which is included as an exhibit in this report. Press releases are how companies officially announce news to the public and investors. So what does all this mean? Well, a company buying back its own stock can signal confidence in its future. It reduces the number of shares available, which can increase the value of the remaining shares. In SEACOR Marine's case, they used money from a vessel sale and got the go-ahead from their lenders, showing they are managing their finances carefully. In summary, SEACOR Marine has bought back a significant chunk of its stock and warrants from Carlyle, spending around $12.9 million from a vessel sale. This move simplifies their stock structure and potentially boosts the value of the remaining shares. Now, let's take a broader look at SEACOR Marine. This company operates in the offshore marine and support transportation industry. This is an industry where companies move personnel and goods to offshore facilities, mainly for the oil and gas business. So their success is tied to how well the oil and gas industry is doing. One of the strengths of SEACOR Marine is their experience. They've been in this industry for a while and have a good understanding of how it works. They also have a diverse fleet of vessels which allows them to offer different services to their customers. However, SEACOR Marine faces some challenges. The oil and gas industry can be very up and down. When oil prices drop, companies cut back on exploration and production, which means less business for SEACOR Marine. Also, there are a lot of competitors in this industry which can drive down prices and profits. Looking ahead, SEACOR Marine has some opportunities. The demand for offshore energy is expected to grow in the coming years, which could lead to more business. They could also expand into new markets such as offshore wind energy. Overall, SEACOR Marine seems to be in a pretty good position. They have experience, a diverse fleet, and potential growth opportunities. However, they need to be aware of the risks such as the ups and downs of the oil and gas industry and the competition they face. In conclusion, SEACOR Marine's stock buyback is a positive sign, but it's important to remember that their success depends on factors like the health of the oil and gas industry and how well they manage their business. Thanks for watching. If you found this helpful, give us a like, leave a comment, and subscribe for more Corporate Decoder videos.